Zoom, zoom, zoom. 4.3%. 4.3%. That is a nice jump. And I know many may question day the gathering, but on the surface, this would be the strongest quarter going back to the third quarter of 2023.
So is this going to be good for rates? Because, as I always say, the better the news in the economy, well, the most likely the Federal Reserve is not going to cut rates. So if you're watching this channel, you might be a homeowner trying to figure out what's going to go on with these, because you're like, okay, if I can refinance and save some money, maybe I should do it now, or maybe should I wait? Maybe you're a home buyer trying to figure out, okay, if rates stay sticky there, maybe I can just afford a home. Or maybe you're Yahoo Finance that just want to call and ask a question. So interesting, this morning I got a text from Yahoo Finance and they called up and said, Dan, can you go over where mortgage rates are going to go next year? So if you haven't seen, I was on Yahoo Finance recently on the 50-year mortgage. They called me back in September asking me if rates are ever going to go back to 8%. And then they called once again today. So when they post that video, I'll come out and show it to you, because they were just like you guys. They come in each day and they try to figure out what in the heck's going to go on with those and why. So today we're going to talk about the whys behind it. Those whys are coming up with the GDP. The GDP is showing the economy is growing huge, I guess is the best way to put it. So let's get over to Rick Santelli. I want him to finish all this, what he was talking about. And then I'm going to show you the market reactions to this. It is a holiday week. This is probably going to be my last report for this week. But let's get over to Rick to see what the news really came in at. Is this good news, bad news for interest rates? Well, when he's done, I'll put it in layman's terms and let you know what the market's reactions are to these. And I'll show you where the market ended and what my expectations are, or what I told Yahoo Finance. So Rick, take it away for me, buddy.
When it was 4.7, this is strong. 3.5 on consumption blows away the 2.7 we were expecting. That will be the best since the last quarter of 24. On the price index, here's some not good news. 3.8% on the price index. That's much higher than 2.7 we were looking for, much higher than 2.1 in the rearview mirror. That would equal the first quarter of 23 to find a higher price structure. You'd have to go to the last quarter of 2022 when we're at 3.9%.
So now what he's saying is the production and the growth of the economy is skyrocketing. But he's also saying, well, prices are too. Prices being paid on the manufacturing side. So this is probably going to continue to roll over to the numbers on where inflation is going to go. So let's get over and I'll give you my insight on where I think rates are going to go from here, because we really have not much economic news. I think we're going to get the jobs report tomorrow, or initial jobless claims and continued claims. I was hoping we got those today. We're getting those tomorrow. But with a short holiday, with Christmas Eve and the markets closing early, this might really not even affect the markets. So here's my thoughts behind all this. So what I told Yahoo Finance, I'll kind of tell you guys the same thing. Where mortgage rates are going to go from here, well, here's my expectations. I'm saying, yeah, we're going to have a little bit hotter inflation in areas, but then we're going to have areas that are actually going to retract the inflation numbers. And every day when you come in, we talk about where the stock market's going, where the bond market's going, where oil goes. Well, where oil goes is where the energy prices are going. So if we have energy basically plummeting right now, and we have the housing affordability piece, I know it seems crazy. I know houses are really tough to afford, but housing equivalent rents, they were ticking at about a 7% pace, then they went down to 5%, and then they're about 3.5 to 5 right now. But what they really are, well, that's what the Fed's tracking. What they truly are about 1% or 0 right now. So when you have all this data from energy and tariffs hitting the markets, I think it's more than going to offset what the inflation numbers are going to look like. So I'm thinking inflation is going to be steady, or maybe even start to come down. And I called that recently, and people thought I was crazy, and that happened. Then you get over to the jobs market. Again, it's another area that's just cloudy. So I think right now, even tomorrow's numbers, it could come in good or bad. I think the markets are just going to say, you know what, we're just going to wait until maybe January. Let's let the dust settle. The government just opened back up. The numbers are skewed. Nobody's trusting anything right now. Let's just punt right into 2026 and see where things take us. So folks, if you're out there right now, you're a homeowner trying to think, okay, does it make sense to refinance now? Because rates, what are they going to do? Well, based on what Rick Santelli's telling us, the markets are most likely going to have stability when it comes to mortgage mortgage rate. So can you save some money now on a refinance? Well, let me help those out there that are currently homeowners. If you're a homeowner and want to see, okay, does a refinance help now? What's the rate? What does it do me any good? Well, put your information right up through there. It's called RateWatch 2.0. We're working on this with AI. This thing is going to be crazy. It's going to track basically every day exactly down to the 8th, and we're going to track your rates for you. So we don't sell the data. It'll be us tracking it for you. So put in your information right up through there, put in the rate that you'd like to refinance, and we'll reach out to you. But let's go over what my thoughts are if you're not looking to buy till spring or maybe looking to build. Here's my thoughts. This economic data for the rest of this week and even next week, I think it's just going to go one ear out the other on the markets. There might be some ups and downs here and there, but overall in the next 2 weeks, nothing's really going to happen. If you're closing within 30 days, just lock in, because the financial news we have from here going forward isn't going to really skew the markets at all. If you're looking to close maybe over 30 days or 45 days, what should you do? Well, first off, I want to explain to you guys how mortgage programs work. And right now, Alan and I were talking behind the scenes. I'm like, you know what? The spread between interest rates right now is pretty intriguing. And here's what I mean. If you look over there, the 30-year fixed rate today is 6.24. Okay, but the FHA rate is 5.88. Rates on here I'm seeing in most cases are about 5.75. So even if you have good credit, but you're not putting down 20%, does maybe getting an FHA loan make a little more sense? Now, let me go over the calculations with you, because if you're looking to refinance, this might come into play. If you're looking to buy or build, this might come into play as well. So let's just take an analysis. And I don't know how this scenario is going to work out for you. That's why if you're even looking to buy or build, reach out to us. We can consult you through this. Make sure you're working with the right credit score, the right income that you're using, and what program is best for you, not the banks. So let me just go over to this right through here before we get to my section where I'm going to let you know what I think you guys should do over the next year. Okay, so I'm going to throw in here. Here's a refinance of a client, or we can even say a purchase of a client that's getting a house or getting a loan amount of $350,000. Okay, so I put in $350,000, today's rate at 6.375 on a 30-year fixed. Okay, so then you go over to here, and I'm going to say, okay, the rate's 5.75, but you can see the loan amount's a little bit higher. Well, FHA charges you a fee of the loan amount. So I increased this enough to kind of offset that, just to make it clear and to compare apples to apples. Because a lot of people are going to say, well, Dan, FHA has a fee. Well, I just want to let you know, I know, and it's already plugged in there. So we want to make sure we're comparing apples to apples. So here's, even based on that financing fee that FHA charges you, here's what you would save a month. It's $112 a month. Now, this doesn't include what they call PMI. So the lower your credit scores, your PMI might be higher on a conventional loan as well. So your savings might even be more than that. So make sure when you're trying to figure out what rates are out there, make sure you're making sure you're qualifying with the right program. So now let's get over that you understand those a little bit more. My new section that we're calling Lock or Float. Please let me know what you think down below. So here's what we're going to talk about. If you're closing within 30 days, folks, there's really nothing going to go on. Could there be a tweet out there or something that goes, yeah, but most likely nothing's going to take place. So just lock in, enjoy the holidays, and just spread some cheer. Okay, so if you're not looking to close until February, March, April, a lot of leases are due then, don't worry about it. I don't really think that mortgage rates are going to go anywhere. On the technical side, on the economic side, really nothing that should really be of huge concern to us. Inflation might tick up a little bit. I don't really even see it. I'm going to say we had a huge surprise last time. I think we're going to get continuations on surprises on inflation coming out. Same thing with the jobs report. So you're also going to have a completely new cast of characters at the Federal Reserve. So most likely rates are going to come down. Are they for sure? I don't know. So you can't lock anyways unless you have a house under contract, or maybe if you're building, I still wouldn't lock. Closing within 30 days, lock them in. Otherwise, just sit back, reach out to us, let's get you pre-approved, and then enjoy the holidays. So that's what I'm expecting through there. So now, if you're a homeowner, home buyer, you just need some help with all this stuff. You might ask, Dan, what do you do? Well, folks, I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. I'd love to help you out. So we have a unique situation here. Here's why a lot of people use us. It's the slogan I created. It's one application, one credit pool, Just think of that. One application, one credit pool alone is good for one quote. Wonder if we can get you over 30 different quotes. Well, how do we do that? Well, that's what we can do. So the bank I work at provides me the licensing with all 50 states as well as Puerto Rico. Unique thing is they're like, okay, we've been doing this a long time. We know when borrowers call in, they're looking for the best rate and lowest fees. Wonder if we got set up with other banks and credit unions and lenders and was able to offer, all these rates and things with one application, one credit pool, and we can offer you up to 30 different rates. That's what we do here. So if you need some help with that, please reach out to us. Otherwise, if you're a homeowner looking to refinance, home buyer, where rate's going to go from here, hopefully understand now a little more about what in the heck happened to those and why. I'll try to post some videos over the weekend. I know it's a holiday weekend, but I'll be back on Monday for sure. But there might even be a special post over the weekend that's giving you some ideas on what might happen to housing in 2026. So if you haven't subscribed yet, please do so over there. So when I post videos like that, you get an alert and you don't miss them out. So thanks for watching. God bless. Have a fantastic holiday season, folks. And I will see you back in the next few days, but enjoy it. Give somebody a hug that you haven't seen in a long time, and because we're not guaranteed to be here tomorrow. So enjoy the next few days, and I'll be back to advise you guys what I think is going to go on with those and the whys. Take care, folks. See you then. Bye-bye.